See, remember in the last class, I was referring about as how capital gains are got to be computed. How capital gains have got to be computed is given in section 48. Under that, full value of consideration, indexed cost of acquisition, indexed cost of improvement, and related COE and COI, for which firstly we have started that full value of consideration can either be real or it could be notional. Why the concept that it is notional is coming up also, we have made a discussion, right? So under that category of full value of consideration, I am taking up slump sale. What is a slump sale? Slump sale is a lump sum price fixed for a set of assets and liabilities, or you can say as a division, or a unit, an unit of a business. Lump sum price fixed for a set of assets and liabilities, division or an unit of a business. How this is likely to happen? So let me just give you an example. Say a company which is into IT field. So hardware division and software division, they have both. And they have decided to offload the software division to some other company for variety of reasons. What do you mean by variety of reasons? So it may be running in loss, or they do not have adequate workforce to make it big. There could be a lot of reasons you can assign as why they want to effect as a sale. It could be loss making, or their skill sets are more appropriate to develop only hardware and not software, or the software they wanted to sell it for some profit to bring hardware unit into a very big profit making unit. It could be a variety of reasons. Okay. So therefore, you would have in the company assets. You would have in the company liabilities. So you can say hardware company and hardware division and software division, similarly hardware and software. Correct. See, when software division is to be sold, when software unit is to be sold, there could be another IT company which will be taking over this software business. And the consideration, even though we say it is lump sum, there is always a problem to it. What is that? So consideration could be cash or it could be non-cash. Because the company which is taking over may not have the liquidity, but it may be a renowned company. So they will issue shares. So when it is cash, there is no problem, but majority of the cases it could be non-cash. So how do we evaluate? So now valuation is a problem. Correct? Valuation is going to be a problem. So non-cash would mean either it could be in the form of shares or it could be exchange of other assets and liabilities, because that company wanted to give off their hardware division, they may be giving their hardware assets to this particular company. Exchange of other assets and liabilities. Say for us, we wanted to specialize only in hardware. So hardware assets and liabilities only we want. So we are taking up that. Correct. Now this is a place where valuation will come into picture. That is the reason as why we have said actual or notional. So we all know long-term capital gain or short-term capital gain is based on holding less than or equal to 36, more than 36. Not based on the individual assets. For the unit or division as a whole. Are you understanding? For the unit or division as a whole, you have to arrive at for 36 months. Because the rest of the assets will come under 36 months category. So where assets may be variety of assets, you cannot go individually and find out as whether they are older than 36 or less than 36. So for the unit as a whole, you have to decide. So this unit was started 36 months. So even 1 month back also, I would have added assets. All this will come under long-term capital assets. So therefore, when they give this sort of clarity, one more clarity also they bring out. What is that? No indexation for slum sale. No indexation benefit is there for slum sale. Understood? Correct? Now, in the long-term capital asset, it is going to be full value of consideration minus expenses in respect of transfer minus cost of acquisition minus cost of acquisition. Now, this part we have got it, but what is the cost that I got to assign? Okay, initially we started only for full value of consideration being actual or notional. First one for immobile property we have just done. Now we are taking up on to slum sale, which is coming under 50B, section 50B. There is one more item that we have where we have notional, but that is too small to operate. That we will discuss later. Now, what is cost of acquisition? How do we arrive at cost of acquisition? Huh? Okay, there are two items that you have. So, it is notional both for sale value, notional for cost of acquisition also. Both are notional. Say, when no indexation benefit is there, whatever price at which it was bought, you cannot take up because you bought it long time back, but the assets are available at a different condition at the time of sale, at the time of transfer. Therefore, you cannot be bringing the original cost here. Correct? So the department will evaluate every item of asset like this way, whether it is depreciable asset. No, depreciable asset, not jewelry. Depreciable asset would be land and building, plant and machinery, computers, etc. Correct? There could be a case where the asset might have secured 100% write-off in the very first year itself. What rate we have got to assign for them? what cost should be assigned for them. So when you availed 100% reduction in Income Tax Act, then you are not expected to consider this as a cost at all because you have already availed 100%. So therefore, for depreciable assets, the WDV as per Income Tax Act, how much ever depreciation you have deducted and claimed in the past years, that you got to deduct, arrive at the value. And for 100% depreciated item, nil value. For the remaining item of assets and liabilities, what is that you should do? Book value. Because you did not avail anything from the income tax department. Now, there will always be a ulterior motives people carry when this sort of concession is offered. Then what they do is that if they increase the cost, they can reduce the capital gains. No. Therefore, what they do is that for some of the item of assets, they would have increased the value by going in for revaluation. They don't tell that I am going to do this. They will carry out. Some of them, without even knowing that this slum sale will occur after some point of time, they would have revalued. So, some good people will be there, some bad people will always be there. Department is going to be neutral for them. What they do is that they will eliminate revaluation. Whatever assets that you have to be taken up at book value, land is not a depreciable item. Land is appreciated by some 2 crores of rupees and you show 2 crores of rupees in your liability side under revaluation reserve. So when you are taking up that, whatever book value that you have, from there you deduct revaluation reserve. This sort of thing that they do. That is what we are going to take it up in what? Some say. Are you understanding? Now, exactly. You are learning ABCD once again. Feel happy. Sreeniketan will be just jumping and clapping. You will also do that. Meaning of slum sale. Slum sale means transfer of one or more undertakings by means of a lump sum consideration without values being assigned to individual assets and liabilities. Transfer, all that. Capital gains, whether long term or short term. Any profit arising will held more than 36 months long term. Any profit less than that 36 months short term. Deemed cost of acquisition, cost of improvement. Say when our friend was just talking about, I have forgotten. So cost of acquisition as well as cost of improvement. The net worth of the undertaking or the division, as the case may be, shall be the deemed to be the cost of acquisition, cost of improvement for the purpose of section 48 and 49 in relation to the capital asset of such undertaking or division transferred. No indexation benefit would, however, be available even if the slum sale has taken place of an undertaking held for more than 36 months, resulting in long-term capital gain. So it will be called as long-term capital gain only, but indexation benefit will not be available. That's it. Deemed value for full value of consideration. Here is a place where we are going to do that. What Krishnan was just very excited to learn ABCD once again. So he is very, very happy. In fact, it is not simply ABCD alone. So I got to take up whichever is higher also. The fair market value of the capital asset shall be FMB1 or FMB2, whichever is higher. This amendment has come for the assessment year 22-23. Fortunately for you people, they have not asked any question in assessment year 22-23 on slum sale. So therefore, it becomes very important for May 23 and November 23. So Rajagopalan, Karthikeyan and Krishnan, You got to be a little more careful. Now, let us know about what is A. This is on the arrival of asset. This is not on the asset which is transferred out. Book value of all assets other than jewelry, artistic work, that is artistic work, shares, immovable property, as appearing in the books of the undertaking or the division transferred by way of slum sale as reduced by the following amounts. B. The price which the jewelry or artistic work would fetch if sold in the open market value on the basis of valuation obtained from a registered valuer. Fair value of the shares and securities as determined in the manner provided under Rule 11 UA1. The value adopted, assessed or assessable by any authority of the government for the purpose of payment of stamp duty in respect of the immovable property. D. L. See, what is this? Is it based on the assets received or given? So, I will put it this way. Full value of consideration is higher of whichever is higher. Whichever is higher. Okay, if you've gone through Ind AS 16, they will normally be talking about the fair value of the asset given up, fair value of the asset taken in. They take into consideration the fair value of both in exchange of assets. Likewise, here also FMV1 is based on assets and liabilities given up. Given up. FMV2 is based on the assets and liabilities taken up. So here assets and liabilities, it is A, B, C, D and L, plus, plus, plus and minus. That is the reason as why they say the fair market value of the capital asset transferred. I have transferred. Given up means I have given. I have parted. Do not have the confusion. It is very, 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 very clear. See, here I am not going to talk about whether it is fully depreciated or not. For whatever I have given up, I will classify in this fashion. What is A? A stands for what? Book value of all assets other than jewelry and immovable property as appearing. No, fair value. Please allow me to continue because cost is coming up later where it is stated deemed value of full consideration. I am discussing under deemed value of full value of consideration. There is no cost that we are discussing. I will show you because you are all urgent in doing all these matters. For cost, I will communicate. So here is the place where they discuss deemed cost of acquisition, net worth. In case of depreciable assets, in case of self-generated assets, in case of 35D, in all other cases. Here is a place where they are talking about cost. Do not misunderstand this particular issue. We are talking only for full value of consideration under that FMV1. FMV1 is only for assets given up. Whenever we are doing anything on exchange program, which one you do first? Will you just show off your solidarity in giving it first or taking first? You have to give up. That is what Bhagavad Gita is telling. You give up to me. I will take care is what he is telling. What is that statement? Mamegam. Surrender firstly. Give up. Don't expect, sir, will you give up so that I will surrender? Nothing like that. Remember this point clearly. FMB1. FMB1, what is that? Firstly, give up. So why I am repeatedly telling is that you will get the wrong impression. Kali Yugam, no. You will get wrong impression firstly. See, when somebody is taking milk in the shade of palm tree, what impression you will get? Is taking milk or toddy? Impression, wrong impression only you get. Correct? No. If Krishna is taking leave and home, work from home, and call made, not taken means what is that I will think? Oh, I am hearing snoring sound. He says, sir, I went to hospital and all that. How do I know? Wrong impression is what people get. By default, this is Kali Yugam. Krishna is the name. Embodiment of manipulation. Okay. His name is also Krishna only. Rogini also. So, book value of the assets other than jewelry, artistic work, immobile property. I will put this way as assets, other assets. Correct? Then what is that B? Jewelry, artistic work, shares. Am I right? Ah, jewelry and artistic work only. C, shares and securities. Shiv Sena. Next one is stamp duty value of immobile So here I will put it out as a liability. Okay. We will discuss that. What exactly is coming up a little later. Okay. Liabilities. Are you clear? Now assets and liabilities. He is very happy once again. Who is very happy? Krishnan. EFGH. E stands for what? Value of monetary consideration received or accruing as a result of transfer. Monetary consideration received or receivable. Fair market value of non-monetary consideration received or accruing. G, the price which the non-monetary consideration received or accruing other than immobile property. Then this is immobile property. See, this is what I told you initially that you may also get exchange of shares, exchange of other assets and liabilities also. Did I not tell you that? Value of non-monetary, there is monetary consideration. Fair value of non-monetary consideration, or I will put it like this way, so that you can easily remember. Monetary, non-monetary. Under that, 3. Monetary is E. Under non-monetary, It could be share securities and all that, because remember 11UA1 is for shares and securities. Correct. Fair market value of received accruing, I will put it this way, EF, shares and securities. G, price at which there is non-monetary consideration resulting other than immovable property which is not referred under 11UAI. So G, other than shares and securities and immovable property. H, immovable property. IMP, I will put it like this way. Immovable property. Correct? A fair market value of the capital asset shall be decided on the date of slump. For this purpose, valuation date also mean date of slump sale. See, even in the stamp duty value also that we were talking about under 50C, there is a small discussion I have kept pending that we will cover it up after the discussion here. Okay. Now, let me just complete. Whichever is higher becomes fair value of consideration. What is this? Full value of consideration. Correct. Then cost of asset and cost of improvement, they have not made a big discussion there, but here they have mentioned. Deemed cost would mean net worth, assets minus liabilities. So here, I just don't want to repeat. You take a screenshot of this. This itself is more than sufficient. So cost is equal to net worth. You just book it this way. Cost is equal to net worth. Come on, kindly just make note of this portion of the flow chart. So Karthik, Rajagopalan, have you noted this? Rajagopala?
Noting down.
Noting down. If you have finished, please let me know. If you have just done, please let me know. See, as far as the net worth is concerned, aggregate value of total assets and liabilities double star mark, higher of the two. This is the full value of consideration. For net worth value of liabilities, in case of depreciable assets, WDV. In case of self-generated assets, it is going to be nil. In case of other assets, nil. That is in case of other assets, then it is going to be book value minus liabilities. There is double star is for ignore revaluation effect. That means if you have any revaluation, the effect of revaluation has got to be eliminated. So I will put a note here. So even though it is stated, I would say cost under slum sale. It is only net assets. It is going to be net assets. So here they say net assets would mean I will put it this way, land. Anyway, I will just not put it this way. Non-depreciable assets, depreciable assets, self-generated assets, then assets written off 100% in Income Tax Act, but appearing in the balance sheet. Correct? Then others. So non-depreciable assets, book value minus revaluation gain. Depreciable assets, WDV as per Income Tax Act. This value should be nil, this value should be nil, this value should be book value. Correct? Less liabilities. Correct? This is what they have really meant. Huh? Ajita, that is what assets written off 100% in Income Tax Act, but appearing in the, say, people might ask this question that when you have 100% written off, how come it will be there in the balance sheet is what they will be asking question. That is the reason as why I told you, as per income tax, it is 100% you have written off, but as per books of accounts, it may be there. Example, some storage, agricultural storage, 35 AD. So they just give 100% capital asset be written off, building written off. We have certain places where more than 100% also they have allowed to deduct. Huh? Yes, exactly. You got the point right. There is investment based deductions. We used to have under 35D. Now slowly they are phasing out. That is a different issue. But those assets are coming up for sale, so I got to give a special treatment for them. I should not say those are phased out, so therefore forget. I cannot tell like that. Correct? Are you clear? So it is better that we try one problem, then we will be in a better position to understand this. So illustration pal, fan போடுங்க. Yes. Rajagopalan, can you read?
Mr. Sreeram Enterprises, a proprietorship having two units. Unit 1 is transferred on 1/4/2021 by way of some sale for a consideration of rupees 14 lakhs. Unit 1 was started in the year 2005-6. The expenses incurred for this transfer were rupees 38,000. Balance sheet as on 31st March 2021 is as under liabilities and assets. Own capital, revaluation reserve for building, bank loan, 70% for unit 1, trade creditors 25% for unit 1, building machinery, debtors, patents. Other information, revaluation reserve is created by revising upward the value of building of unit 1. The stamp duty value on 1/4/2021 is rupees 10 lakhs. No individual value of any asset is considered in the transfer deed. Patents were acquired on 1/7/2019, on which no depreciation has been charged. Compute the capital gain for the assessment year 22-23.
Right. So the question is about capital gain computed for the assessment year 22-23. They have two units. Unit number 1 was transferred for 1/4/2021 by way of slum sale for a consideration of 14 lakhs. So whether 14 lakhs will be taken up for the purpose of this. So 14 lakhs we will be ignored. We'll be taking up higher of the two. What are the higher of the two? Given up fair value, taken up fair value. So taken up fair value for which one and only when you have different, that is other than cash, we will take up. When they have given 14 lakhs only in the form of cash, we have got to take up that. But if the fair value of the asset given up were to be greater than 14 lakhs, you have to take up the higher of the two. Correct? Now, expenses incurred in transfer 38,000, you got to deduct. So unit 1 is transferred. Unit 1 building. So what is that they have mentioned? Other information regarding revaluation reserve is created by upward revaluation value of assets is 1. Stamp duty value is 10 lakhs. This revaluation reserve concept and all that will be applicable only for cost, but not for fair value. So illustration number 12. So first item of the asset as part of FMB1, fair market value of assets given up. Building, immovable property. Under what head this immovable property will come up? Whether it will come under A, B, C, D, E. Sorry, A, B, C, D, E. Sure, huh? So A is other assets. Second one is jewelry, artistic work. C is Shiv Sena. D is, how do we remember this, my dear? Stamp duty. The D is for stamp duty. Why? Stamp duty. What is your duty? D. Huh? Building, item number D. What is the value? Stamp duty value? 10 lakhs. 10 lakhs. Building over. Machinery, debtors and patents remaining under A. Machinery, debtors and patents. All part of A. What is that we have seen as part of A? No, other assets okay, but what is the value? You have forgotten. Book value of all assets. Book value. For B, it is there is no valuation report they have. Registered valuer. Registered value.
Open market price.
The price at which it will fill on the basis of valuation report obtained from a registered valuer. S and S rule 11 UA1. How do you remember? Huh? How do you remember? So our Christian child is telling Uva. Uva. Okay. Anyway, we got it now with a specific understanding. Machinery, data and patents will come there. 2 lakhs, 1.4 lakhs and 1.6 lakhs. Right. Sorry. 4 to 2.4 to 2.5 lakhs. Okay. Then L also we got to deduct. What are all the points that we have got to take up for L? The book value of liabilities as appearing in the books of accounts of the undertaking or division transferred by way of some sale, but not including the following. These items are not to be included. Paid up capital. The amount set apart for payment of dividend for preference shares. This is proposed dividend. Reserves and surplus by whatever name through which you call. Any amount representing income tax provision also you should not take into consideration. Provision other than on account of ascertained liabilities and contingent liabilities. So here what is that you have? Bank loan and trade creditors have got to be taken up. L. Bank loan, trade creditors. 70%. Trade creditors 25%. $14.825. What is this? FMB1. Fair market value number 2. This is given in the problem. Non-monetary you do not have. Given non-monetary is not there. So therefore it is E. Am I right? F, G and H are missing. Correct? No. Only E. Whichever is higher. Full value of consideration is 14.825. 825. Now expenses incurred in transfer. How much is that? 38,000.38. So net consideration is 14.445. 14.445. Now cost of acquisition. Cost of acquisition. Building 13 lakhs less revaluation gain or revaluation reserve. Fully related to the first asset only 5 lakhs. 8 lakhs. Depreciable machinery machinery 4 lakhs. What is the WDV? As per Income Tax Act, they have not mentioned when it was. There is also a no. The unit was started by 25-26. What was the cost? What depreciation? We will consider this machinery as per income tax and this are same because we don't have any other. Go 4 lakhs. Then non-depreciable first one is subjected to revaluation reserve. Depreciable, non-depreciable under that patent, that is debtors and patents. Debtors 2 lakhs, 2 lakh and 50,000, 4 lakh 50,000, 16 lakhs 50,000. Liabilities, so which remained the same in the previous case. 3 lakh 67,500. 3 lakhs 67,500. I hope that it should be right. 16 minus 367,500, which is 12,82,500 as a cost. From here, I got to deduct 14 lakhs 44,500. So, giving room for long-term capital gain as 1,62,000. Let us just find out. We went wrong. Net worth in which we went wrong. Sorry. Building, correct. Machinery, 4 lakhs. Patent see note 2 below. No depreciation they have charged, no, but it is depreciable item. Sure. And they have given you the date also. It is depreciable, which is not correct. Extremely sorry. I really feel bad for this. Patents, they have given you the date, no. They have given you the date on 1/7/2019. So, patents when you bought on 1/7/19 for the previous year 1920 and 2021 you would have depreciated. What is the rate of depreciation? 25%. You did not charge depreciation as per books, but as per Income Tax Act, depreciable means you got to charge depreciation. I went wrong. So 2,50,000 on which full depreciation I got to charge. So how much is that? 25% on 2,50,000, 62,500. Correct? Next year, 25% on 2,50,000 minus 62,500. Point 0.25 into 2,50,000 minus 62,500. One 187,500 into 0.25. 187,500 into 0.75. So this becomes 1,40,625. So it is 12 lakhs plus 140,625. That comes to non-depreciable item data 2 lakhs plus lakhs 1,625 minus 367 500 1173 125 minus 15 lakh 44,500. 271,375. 271,375. Correct. The only area where you have got to be very careful is somehow it slipped my mind, but this is an important problem. Please just make any problem, any question paper for the last few chances. That is, let me tell you, Institute is fond of this. Which one? Slump sale. Now, I would like to take up I would like to just check up from MCQ and the case study. Huh?
Not money.
Vara. Note பண்ணியாச்சா? Shall I proceed? Gopala?
Yes, yes. Okay.
Oh. So here, there is a big question that you have. Delta has 3 units, alpha, beta, and gamma. It transfers its unit gamma to epsilon limited by of some sale on 1/4/21 balance sheet is as follows. Lump sum consideration on transfer of gamma is 1320 lakhs. Fixed assets of unit gamma include land which was purchased at 90 lakhs in March 20 and revalued at 135 as on 31st of March 2021. The stamp duty value on the land on that date being 130 lakhs. Other fixed assets represent plant and machinery and furniture which reflected at 160 lakhs, 825 lakhs minus value of land which represents WDV of those assets as per books. WDV as per 43.6 being 6.5 lakhs. Other assets do not include jewelry, artistic work, shares and securities. Liabilities represent ascertained liabilities, does not include provision for taxation or proposed dividend. Unit gamma was set up in March 2020. So therefore, it is going to be short term. Assume that the turnover of Delta Limited for 100 and that is financial year 1920 is they are including this with MAT and all that. So, but question is not only one question. There are multiple questions that you have. So, for computing, which one tax liability? For tax liability, it may be taken into consideration. So, we will take into consideration only one portion of the question. Okay. So, all of you, why don't you try this? So, how do you have access to this independently to try? So, what I do is that shall I send it by mail to you now? It is there in page number 131. I will send you by mail now. Now you will not be in a position to see that, or else you got to download independently. So instead of you searching, I will send it to you. Hmm? Huh? Brother, sir. So now I am sending it to all of you. SV Krishnan, Pavan, Rajagopalan, கார்த்திகேயன் இவன் பேர் தான் இல்லைன்னு நினைக்கிறேன். உங்க இது சொல்லுங்க. கார்த்திக்
dot KARTHIC
கார்த்திக் என்ன ஸ்பெல்லிங்? KAR
KATHIC dot 1984 gmail.com
1984 at
gmail.com.
gmail.com. Understand?
Okay.
So now you can just, I will show you in the screen that, but you can also check up with your page number 131. Please just try. I will give you 10 minutes time. Please try. All the very best.
Hello. Not yet received the mail, sir.
உங்களுக்கு வரலையா?
வரல சார்.
வரேன்.
ஐயோ போச்சு சாப்பிட்டு
கார்த்திக் KARTHICE
ஐசி சார். ஐசியூ இல்ல சார்.
ஐசி தான். நான் உங்களுக்கு இப்போ காமிக்கிறேன் பாருங்க. ஐசி
அதான் சார்.
இதானே 1984 தானே?
ஆமா சார்.
இது அனுப்பிச்சிட்டேனே. வந்துச்சா பாருங்க. உங்களுக்குலாம் வந்துட்டு வேணும்.
வந்துச்சு சார்.
பால் பையனா இருக்காங்க அந்த சைடில். நீங்க சொல்றது திருப்பி ரிப்பீட் பண்றாங்க. இன்னைக்கு ஸ்கூல் இல்லையா?
ஸ்கூல் லீவ் சார். சரி.
So if you have completed, please let me know. So yes, what is the first question? From the information given above, for computing capital gain on slump sale of unit gamma, what would be the deemed cost of acquisition and improvement for the purpose of section 48 and 49? This is not about ABCD, EFGH. It is all about the net worth. How you got to take into consideration for gamma? For gamma's fixed assets, they are giving you the breakup. Fixed assets include land, which is of 90 lakhs, revalued at 135 lakhs. So how much is that? So which was purchased at 90 lakhs, which was taken up at 135 lakhs. There is a difference to the extent of 45 lakhs. So whether you have 45 lakhs exclusively shown as revaluation, no. That is all hidden under reserves and surplus. So therefore, we will take up straight away 90 lakhs. Stamp duty value of that land is 130 lakhs is irrelevant for the purpose of finding out cost of acquisition. Then other fixed assets represent plant and machinery which reflected 690. That is 825 minus value of the land. So 825 minus 135. 825 minus 135 is 690. Such a 690 under WDV as per Income Tax Act 43 section 43(6) comes to 6.5. So take 6.5. Then other assets do not include artistic jewelry, artistic. So therefore, you got to take into consideration only the book value. So what is the book value that you have for gamma? 585. So it is 90 plus 615 plus 585. The liabilities do not include, yeah,
No, sir. Total 1,290.
the liabilities represent nothing of that proposed dividend and proposed taxation that you have. It is 135. When you deduct, how much is that you find it is coming up? 1155. 1155 is correct, but what is the resultant capital gain is what they. So what is the rate of taxation for this? Huh? You have not discussed about the tax liability in our class. So now let us just look into the tax liability.
We are asking only the capital gain, sir.
Is that they are asking capital gain?
Yes.
Capital gain only. Okay, extremely sorry. So capital gain only they are asking. So therefore, indirectly they have asked you to find out ABCD, and for which there is no information for you to operate. So whichever is higher, for which you require a lot of information. A for what? Other assets as per book value. B, jewelry and artistic registered value or value. C, Shiv Sena shares and securities as per UA. UA. D, stamp duty value. ABCD minus liability. They have not given all this. Okay. Under FMV2, you subclassify into two. What are those? Monetary and non-monetary. Monetary is given in the problem. 1320. There is no other items that you have. So you simply ignore 1320. 1320 minus 1155 gives you 165. This is the answer. So now let us just go through the answer. Answer and what is the answer that they have given? Which page? 134. 1155 and 165 is the correct answer. Okay. Is there any possibility that we can increase our scope? Huh? Yeah. See, our friend is telling, sir, FMV1 to FMV1 we can find out. Yes, correct only. He is right. FMV1 A.
FMV2 தான் பெருசு.
இல்ல பெருசு, பட் கால்குலேட் பண்ணி சொல்லணும். FMV1 A, other assets. Other assets 585. B, others, under that you have
Depreciable, non-depreciable.
depreciable, non-depreciable. Depreciable how much? 690
600.
and non-depreciable 585. 1275. B, nil. C, nil. D, 130. Then L, 135. 1270. FMV2, how much? 1320 under E. Higher of the two. 1320. Cost of acquisition 1155. So short term capital gain 165. Okay. Right. Now I would like to you people to try as many problems in slum sale. Slum sale is over. Okay. So with that we will put an end for slum sale, and a small portion in the last class which I got to take up for stamp duty value. Let me take up that. Stamp duty value balance portion. So where you have two dates, date of agreement, date of registration. Is that over? Okay. If you have done, then it is okay. I think I have just done that. I was just thinking that we have first. Okay. So, so with that, we will just put an end. I have some other works to carry out, personal works to carry out, and we will be meeting tomorrow positively. Thank you.
Thank you, sir.